Hey guys, welcome to another week. I hope you guys had a very beautiful weekend, and I hope you guys took time to go over your trades, journal your trades, and reflect on things you need to improve, in your trading journey. So this new week, we're gonna be looking at the Euro USD because this was actually a very interesting pair for us last week. You know, with other expectations. The market moved. The NFP affected the market. At some point, we saw an upsurge of the demand for the US dollars. So this week we're going to be looking at this pair to see potential opportunities on this pair for this week. So let's get it. So this is the monthly time frame as usual. You guys know our zones are always active, right? So we have the upper zone right here with a gray rectangle. You can see the buy sellers injection, the buyers injection, the sellers, the sellers injection right here. You can see the buy, sellers injection, and you can see the market coming back to this level, right? So we can see the lower zone, which is the buy injection, the buy, injection to the market, and we have the blue mid-range zone. A mid-range zone is always a zone in between two zones that has that can act as the key value areas, right? So we have the sell right here, we have the buy, we have the buy, we have the buy. So you can see the key value area. Key value area are areas whereby the market actually make reactions on. So that being said, let's move to the weekly time frame. But before we move to the weekly time frame, we have to understand something. The price has crossed this level, and the next level the price might be coming to is definitely this level right here. So we definitely know something for sure that price is actually we definitely know something for sure. The price is actually coming to make the bullish continuation to the upside, and we've been on this pair for quite a while, taking advantage of the move. So let's go to the weekly time frame. So on the weekly time frame, what do we have? Definitely we've seen price made a push to the upside. You can see the retest, and now price seeming to be making a push to the upside. So let's identify the zone. So we have a key lower zone right here, right on the weekly zone. This is a weekly zone we want to identify now in between the mid-range zone, the blue mid-range zone, and the upper gray zone, right? To really understand what's going on. So we have the mid-range zone, which is area of key value areas as well. You can see the sell sensitivity, the buy sensitivity, the sell later on the buy a couple of weeks ago. So we have the last key zone or the upside, which is what you can see. This was the highest level the price got to before it rejected. So one thing we know for sure is the price had found the support right on the lower zone, broken the mean range zone, and now price seeming to be coming to the zone. But now let's look at things from the bigger scope. So pattern wise, what do we know? We see the price has made a push phase, price has made an exhaustion phase, right? And price is making a continuation phase to give us a A B equals a CD pattern. So let's draw it out. So we have a AB right here, right? Measure both sides equals the CD pattern right here. So we know something for sure that price is actually moving on the AB equals the CD pattern. Now, moving on the AB equals the CD pattern, what has price done? Price has broken the mean range zone right on this level. You can see the very beautiful retest right on this level. And I remember we took advantage of this, and price has been moving so far. So what do we know for sure? We understand the fact that price is actually most likely going to make a move, to the upside to complete, these zones right here. Then, of course, when we find a break, then we could actually make a push to the upside. So this is something that we know. So we know that number one, if we're going to be finding an opportunity, right, we have to have our TP1 right here and our TP2 right on this level. So this is the advantage we want to take care of for this week. So now let's look at the way price has been reacting for the past week, because this is a very important thing for us. So after price made the push, price make the exhaustion and make the further continuation push. But you can see out there was a lack of momentum right on this level. So what does that mean? A lot of people taking the profit, a lot of fundamental influence on prices. Last week you can see we started the week with a very strong bullish bias, but over time there was a sudden upsurge in the demand for USD, but later on price went back to the bullish scope after the NFP release, which came actually worse than expected, right? And of course the possibility of inflation in the US economy, right? So let's move to the daily time frame to see what has been happening. So on the daily time frame, of course, we have a trend line, and we can see the price is still a very bullish one. So let me make this really clear again. So we have the push, The A to B push, the B to C exhaustion, and the C to D continuation. So, right. So, if we're going to be having, a situation where we're going to find a buy opportunity, we can be looking to this level as our TP1, then we could be looking into this level as our TP2. But definitely, we want to take advantage of this TP1 to form the completion, because after price gets to this level, there's high potential for a mini rejection right before price make the push to the next level. So, we want to be able to take our profit from here, to capitalize on the exhaustion and capitalize on the next phase of the push to the upside. So that being said, now this is priced now on the daily time frame. You can see that these weekly zones are now much more clearer on the daily time frame. You can see the rejection, you can see the buy, you can see the sell, you can see the buy. So now we have price reacting or moving between the mid-range zone and the upper zone of the weekly zones. So now what do we want to do on the daily time frame? Let's identify our daily mid-range so that we can narrow our concentration as regards to the zone that we are trading. So now let's look at it. So after price made this strong push to the upside, what do we have? We have a situation whereby price made an exhaustion, right? Found the support at the mid-range zone, made a push to the upside, right? Then made a break below the mid-range zone, then start to make a move to this level. So it's safe to say we have our major lower high structure right here before price picked up right to give us the extension CD right here. So what do we know for sure? After price picked up, cross the mid-range zone right here. So let's break it down in details, right? So price broke the mid-range zone. You can see the little retest right on this level, which is a smaller lower high, which is not the most definite. This is the bigger structure. These are the smaller structure. So one thing we know for sure is the price had crossed this key level right here, right? So after price picked up, what do we know? Price actually found the support right on this level, right, broke the mid-range zone, found the support right on this level, and ever since then, price has been making a move. Now, one thing I want you to understand is price has broken the major lower high right here. So let's take it off. Let's take everything off so that we can now make sense of things. So number one, let's acknowledge the fact the price actually came on this level, right? Turn a previous area of support to resistance by breaking the major main range zone. We've talked about the story about it, right? Found the support right here, moving to the upside. But this is not a concentration. But the idea right here is that we actually want to know that this was where price got the major injection from before it started to make the push to the upside. So after this injection, what did price do? Price actually broke this main range zone right here. So we have our daily main range zone, which is right here. So we have a situation of a daily mid-range zone, which is right here, which is definitely the break, right, of this last high right on this level. So now that we have that, the break of this last high, we definitely know something for sure, that the injection right here is not enough to push price. The injection right here is not enough to make price find a continuational push to this level. At some point, there have to be an exhaustion for the next phase of the strong ejection, which we could be seeing right on this level. So we know something for sure, that price has broken the structure. Now let's structurally, what do we know? Price has broken the structure, but this is not just a structural, level. It's also a daily mid-range zone right here. The price is finding a support right here, another support right here. After the first injection right here, price finding another injection to complete our push to the upside. So definitely we nailed it. So what are the criteria we're looking at? Break of the daily mid-range zone, price finding a retest for further injection, break of the major structure, the lower high structure, price finding a retest, to get in, and that's what we're looking at. So now that we have this, this in game, so what do we know? Let's look at what we did last week, right before the NFP. So now, now that we understand the fact the price might be moving to the upside, so let's take it to the 4 hours to understand things properly. So on the 4 hours, this is a very interesting trade for us last week. This was a very interesting trade for us last week, because on the 4 hours time frame, one thing we saw was that before, this was all the candlestick before the NFP, and this came as a result of the demand, in the USD, right? This came because of the demand in the USD, right, and causing the euro to actually fall. So what do we know for sure is that After price started to make this push, this was the major first injection. It started to make a smaller structure, which is the higher low. You can see price rejected this mid-range zone, then made a push like this. This rejected at the 61.8 Fibonacci. This also rejected at the 61.8 Fibonacci. Then price formed into a lower high. Then price came back to finding a support right on this level. So what do we know for sure? On the daily time frame, this is actually a 61.8 rejection level, which is what we can see right here. So let's bring it out. So apart from the fact that this is a mid-range zone, price is finding a support, we need to understand clearly that this is also an area of the 61.8 mid-range zone, the 61.8 Fibonacci rejection of the last higher low on the daily time frame. Then so we come to the 4 hours. So what do we know on the 4 hours? We saw before the NFP got released, we saw the way the price was moving, and we said we could actually be having a rejection right on this level, because this area are all zones of the 61.8 rejection. So what happened after the NFP release? We entered the trade and we had a very strong push of about 50. I think we closed on 53 pips. So now for the new week entry, what are we looking at? So price is on a very strong level right now. So we have price still stuck between this level for the new week. Now we're trying to look for a new week, buy opportunity. So one thing we know for sure is that price is still on this level. You can see this level is a very strong level, the resistance, the support, of course we have the fake out, then we support. So one thing we know for sure is that if price should break this level to the upside, then we could be having a situation whereby we could be having a further push to the upside. But are we just going to enter like that? No, we're not just going to enter like that. We need to identify the upper zone as well. So what do we have right here on the upper zone? We have a situation whereby price is on the resistance. So to have a safe entry next week, definitely we have to make up the structure of this level. So this was the point whereby the dollar demand was so high and causing the euro to fall. Then we have a situation whereby price started to move on lower low. So one thing we know for sure is that now after the NFP this picked up, definitely we could be having price making a very first push to this level. So what are we going to consider for our entry for next week? We're going to be looking at a situation where price give us a pullback, then we can enter right back on the continuation. So where is the safest spot to enter this trade? We're going to be looking at a break of this upper level right here. So if we can have a break of this upper level right here, if we can have a break of this upper level right here, then we can be looking, when we see a 4-hour close above this level, we can be looking to be joining for the next 87 to 90 pips right on this trade. So this is what we're looking on this trade. So if we're going to be having our overall setup for we that we've entered, taking advantage of the NFP, definitely we're looking at the trade of about 231 pips. But people that want to enter the new week, this is an entry for an aggressive entry to 164 pips. And definitely for people that want to be conservative enough, we can be having an entry of 90 pips and risking as low as like 45 pips to give us a 1/2 trade. So this is definitely what we're looking at. If you like this video, you could if you find this video interesting, you could like, you can subscribe to our YouTube channel, No Bad Trade Forex, or follow us on Instagram, No Bad Trade, and definitely share with your friends. Thank you guys so much, and I wish you guys a very beautiful week ahead. Thank you.